Google is on an absolute tear this year, up over 50% from the start of the year, which even beats the NASDAQ 100, which is surprising. We've talked about Google. I love Google. To me, nothing is more exciting than a company that can dominate their space so much. So looking at this company is really, really exciting for me. So let's go take a look at it. We're going to cover some news, some bull and bear cases. We're going to cover our 8 pillars, some analyst estimates, and then, of course, we're going to finish it off with probably what you're looking for the most, which is what price to pay for the stock by using our stock analyzer tool. So if you're new to our channel, we have something in this video for beginners all the way to more advanced investors and everything in between. Stick with us the entire time. You'll learn something. And if you think we've missed something really, really important, please write it in the chat. The next time we do Google, we will pick another comment from our users, from our fan base to sit there and include, and it could be bull cases, bear cases, whatever it is, please let us know. So let's go take a look at Google right here. So like I said, it's up 51% in the last year. 1 year, it's up 22%. All-time high of 152, it's at 135 right now. I remember making videos of Google closer to 150 and saying, hey, I'm interested sub 100, and I literally had comments, people saying it'll never go below 100. 11/3/2022, a mere 9 months ago, is at $83 was its low. And a lot of people then, if you go look at the news, Google's failing, the CEO stinks, because news follows the stock price, not the other way around. When a stock is going up, here's how awesome the company is, and the stock is going down, here's how terrible the company is, okay? Now, sometimes there's validity to both of them, both arguments, but we like to separate the story from the fundamentals and find a company that is mispriced because the story is too negative. So the market cap of Google, $1.72 trillion. That means if you wanted to own every share outstanding on the market, you have to write a check for $1.72 trillion, okay? Now, here's something interesting that I love. The enterprise value. Now, this includes the cash and the debt on the company. Market cap plus debt minus cash, it's the exact same amount, which essentially means they have essentially no debt. The cash can basically be used to write off the debt. That's awesome. Just like you at home, a company that has essentially no debt, it's very hard for them to go bankrupt. The other thing about Google, they have 92.07% search engine market share worldwide. The number 1 and number 2 search engines in the world are Google and the very website you're on right now, YouTube. The number 1 and number 2 search engine, and they're both owned by Google. Google paid $1 billion or $1.6 billion for YouTube 15, 16 years ago, and it now generates $15+ billion a year in revenue. That is what we call a great investment. All right. 5-year PE is 32, 1-year PE 28. Seems a little rich. However, Google has quite the hold on its market and a very high return on its capital. That means it can invest money at high rates of return, and you should be willing to pay a premium for that market share, basically moat, and that high return on invested capital. So even though this 28 or 32 might seem high, it could be okay. Because if they can grow their revenue and profit at faster rates, you should be willing to pay a higher price. 55% gross margin. That means for every extra dollar they bring in, they're going to add 55 cents to that bottom line before taxes. That's pretty awesome. And a bottom line margin of low 20%. They laid off some people last year, so hopefully they're going to make up for the decrease over the last 5 years. No dividends, which I'm happy about. And let's see what other news we have. Judge dismisses Republican lawsuit against Google over Gmail spam filtering. Sorry, Mo. All right, a couple bull cases on the company. And usually Mo reads these, so since he's out of town, I have to read these off here. Google Cloud is increasing its market share of revenues trailing 12 months. And there were some leaked company documents that said estimates are as high as 24% of market share. That's awesome. And Google still dominates the search engines. I mean, Bing had a big surge because of AI, but it's still Google no matter what. Let's see, what else we got? A couple bear cases. I don't know if this is much of a bear case, but I do understand the reason. It's likely that Google overpaid for the NFL Sunday ticket. They paid about $2 billion per year over the next 7 years. They need 4.5 million subscribers to break even. as comparison, DirecTV has been paying $500 million less per year for the Sunday ticket, and they're still losing money on it, okay? So to me, this is probably Google's way of saying, listen, sports is going to be a big advertising venue. We might just go overpay for it like we did for YouTube at the time probably, but it ends up working itself out. Back then, 1.6 billion, whatever it was for YouTube seemed like an obscene amount of money. But they knew what they were doing. They knew video was the future. They know sports are probably a likely avenue for higher advertising costs. All right. All right. We have a comment from Imported Music, one of our followers on YouTube. He said, Google will eventually get washed out and sell off when the AI bubble bursts. I don't know if I believe that. That seems a little dramatic, but I appreciate the comment either way. And guys, make comments below on what you think, anything I might have missed on Google here going forward. And by the way, that drop from the all-time high, look at this. February, it was from February of last year to November of last year. 9 months, lickety split, almost fell 50%. All right, so let's take a look at our 8 pillars on Google. 8 pillars. All right, remember guys, if you have our software, you can customize these 8 pillars up to 12 on your own, so please do it. Guys, 6 check marks, 2 X's, and there are valuation metrics. The 5-year PE stands at 33, and so does the 5-year pre-cash flow stands at 34. So basically all in line. Guys, everything else, I don't really like the shares being bought back. 8.5% of their shares. I know share buybacks are exciting, but they got to make sure they're cheap. They're buying back cheap shares. That's what you got to make sure of. Cash flow has grown $43.5 billion, and net income's only grown 26. Love that. Love it when the cash flow is growing faster than the net income. Remember I told you the debt levels right here, one of our pillars. They can buy back, they can pay off all their long-term liabilities with about 9 months of their free cash flow. That's incredible. That doesn't even include the cash they have on hand. The cash they have on hand is alone $120 billion. Total current assets, $170 billion. Their total liabilities in general are $116 billion. Guys, that's an incredible business. They just spit off cash. And I love the fact they don't need to take on more debt just to have debt, right? It's awesome. All right, what are analysts saying about good old Googly Moogly? They're expecting profit this year per share of about $6 a share, $5.80. And into 2027, growing to almost $10 per share. That's almost doubling. So it's about 70 or 80% increase over the next 4 or 5 years. That's fast. That's what? 14, 15% a year in growth of their earnings per share. It's pretty awesome. The revenue, and this is my point, with the high gross margin, their revenue isn't growing anywhere near as fast, right? Their revenue is still growing, but it's going to go from 314 billion estimate to 442. Guys, Google, you need to pay a premium for Google. I truly, truly believe that Google is a company that I've got to pay a premium for. Doesn't mean that today's price makes sense, and we'll get to that shortly. But just remember, you need to pay a premium for great companies. I personally believe Google is a great company. They dominate search. I don't know how they've done on the hardware side with their phone and all that stuff, but they dominate the search market. Doesn't mean somebody can't come in and overtake that. But literally right now, it's Google it. Google it. Google it. I still remember the first time I heard about Google. I was in the University of Michigan. I was in the computer lab. It was called the fishbowl because it was surrounded by all windows, so it felt like a fishbowl. And I was with one of my friends, Chris. I don't think he knows I even have his channel. But anyways, I was there doing something on the computer, and I went to like Yahoo to search something. He goes, "You use Yahoo?" I was like, "Yeah." He goes, "Oh no, I use Google." I'm like, "I've never heard of Google." Went to it, never stopped using it. And that was 2002. That was the fall of 2002. That's when that happened. And I think Google was a few years old at that time. All right. So we love reviewing Google because to me, Google is a company that really embodies everything we want to see in companies. We want to see good growth. We want to see great balance sheet, good cash flow, these sort of things. And they're also innovative. I mean, 98% of their revenue comes from search. However, they're at 2%. They're really trying to grow their other businesses. And they're losing money right now, but they're really trying to grow their other businesses into other areas. Remember, as the world gets larger and larger, I do think Google is going to have a better share. If you're new to the channel, this is our software. Our software is awesome. You get everything here that you've seen, plus everything on your phone. The mobile app is just as good as the software here. Plus you get all of these other tools. And I really want you to check this out because we made the software for what all the needs I had, plus to make life easier for other investors. So has all these tools included, including the real estate calculator, which will be separated soon. But most importantly, Everything Money community. Thousands and thousands of investors talking every single day about their ideas. So guys, we're doing a $10 off right now. So if you want to learn more about the software, click right here. There'll be a video there explaining the software to you. And without further ado, let's go look at the stock analyzer tool for what price to pay for Google. Okay, so I'm going to do a 10-year analysis. Let's go pull up what I did in the past on Google. Because I really want to see, I just did it July 31st at 11:09 a.m. Let's look at my assumptions here. So I have 6, 9, and 12% of revenue growth. I'm actually going to change that. And the reason being, even the analysts were expecting about 6 or 7% over the next 5 years. And I like that my analyst numbers are kind of in the middle there most of the time. So I'm going to go with 5, 7 point, I'm going to go 5, I'm going to go 4, 6.5, and 9. So I'm going lower than I did before. Okay. Profit margin, 21, 23, and 25% for my low, middle, and high. By the way, guys, I want to mention, look at the return they're getting on their capital. It's increasing over time. That's awesome. It's hard to have a company that keeps increasing its return on capital. And Warren Buffett and Charlie Munger always say it's more important to pay more money for a company that has a high return on capital. That's how you get big compounders. All right. Free cash flow margin, I'm going to keep exactly the same. Now, PE. The PE I have set here was 17, 20, and 23. Guys, the art of investing is so hard because what's the right PE for Google? If the market average is 15 over long periods of time, what premium should you pay for Google? I could hear an argument for 25. I could hear an argument for 15. That's the hard part about investing. So I'm going to stick with 17, 20, and 23. But for my desired return, I'm actually going to, I'm going to keep it at 10% on the low side, 11.5 at the middle, and 13 on the high side. Obviously, this is my margin of safety, right? So as I make higher and higher assumptions, I need a bigger margin of safety, which means a higher desired return. And I'm okay if Google completely screws up and does these numbers and I only make 10%. I'm okay with that. That's fine by me. So that's why I put the market average of 10%. I would still be pleased owning Google, and if their screw up still made me 10%, I'd be great with that. So I'm gonna hit the analyze button, and the current stock price is 135. Guys, stick with me for just one more minute. After I explain you the price, after I show you the prices, I'm gonna explain a little bit more about these numbers. Boom. Low price of 74, high price of 125, a middle price of 97. Current price, if you pay the current price of 135 and the low assumptions occur, you're gonna make about 2% a year. If the middle assumptions occur, you make about 7%. And if the high assumptions occur, you're gonna make about 12%. And I just heard that 62.95% of our Everything Money users use Gmail. That's 63%, guys. That's incredible. So guys, I have it on my watch list at 105 because I'm probably willing to pay a little bit of a premium to get this company. But right now, based on these assumptions, that's where I stand, all right? So guys, again, check out the video above in order to learn more about our software. Thank you for your time.